Good weekend all. Ira Epstein of Linn & Associates with your weekend edition of your metal market wrap-up for this Friday, and we're now on October 23rd, 2020. So we finish out a week on a fairly quiet phase. You're only down 3 cents in silver, up only 60 cents in the gold, so no big moves there. Copper did settle back and lost an embedded reading on the daily chart. Late in the day, I was looking at the last trades. This market was around 314, but that's still enough to have caused it to be lost. Remember, it can gain it back the very next day, so that's important. But we're going to look at weekly charts. The dollar failed. Now, I think the market looked last night at the debates and it walked away where I don't think it moved the needle either way. I don't think the president delivered any knockout blows. I think Joe Biden did his own disservice when he talked about the oil industry, and he's going to have to backtrack like you can imagine. But more important to me is I don't think it gave Miss Pelosi, who is running the show right now on COVID relief, any sense to rush in and get a deal done. She'll say, oh, the Senate, they wouldn't vote for it anyway. She doesn't know what they'll do, but she's just been dragging her feet, and it's her political game right now. And if you think she's not the one controlling it, shame on you. She's the one in control. She's the one making the demands. That doesn't mean it's bad for Democrats or good for Democrats, just the way that it is. So where are we? Well, let's go. It's fun when we look at a monthly chart. The monthly chart is still bullish. The market's momentum is correcting to the downside. It's in an overbought pattern. It had been running for the better part of this year up against the upper Bollinger Band with what I call that gorilla glue trade. What does that mean? It means that price just latches on to the upper Bollinger Band. You get over it, you get under it, but you keep hitting it. When you finally break away from it like you've done now, it does not necessarily mean you're going into a bear market. But let's assume it did, just for the sake of discussion. You'd have to get through 1843 to do so on a monthly basis. You can probe it intra-month, doesn't mean anything. Remember, this chart's going to look to see what it does. If you got through that, that would be important. That's $60 away. It's not a close-only chart, so I do pay attention. It's how the market would finish up, obviously. We have another week left. It could happen. If it did, it could put up a target to the 1630 level. Let's flip it the other way, that the market doesn't get under 1843, gets its legs, and momentum starts turning around right here. Well, that means the 2024 level could be in place. I'm going to do some special reports this week on metals. A lot of traders have asked me for it. I haven't done one this month, so I'm going to get it done. When you watch my show, I'll talk about it there and let you know when it's ready. Now a weekly close of charts. This is the 18-week moving average of closes. I should have labeled it, my fault, but I didn't. Market is coming back to it, and that's where markets often get their support area. In other words, if you're up big, you pull back, you're looking for a support zone. Moving averages can form their own trend lines. You always look to see that, and this market's done that. So a close under that could be bearish. It hasn't done it. What's the last high close we had? This one right here of 1950. Well, that's pretty interesting, because if you got over that 2024 area that we're talking about would come into play on that chart. And of course, that would be a move if you could get over it next week to finish off the month strong and over that. That would be bullish. So got to wait and see what another week would hold. When we take a look at the chart, what's obvious? Volatility's come out of the market. Look at how broad these ranges were, and look at how narrow, narrow, narrow they're getting on you. So you've lost the volatility in the market for the moment. We've got everything done. We're now all of going to be when we reopen Sunday night, 10 days or so away from the election. That's not too far away. Actually, it's 9 days from that point. So it'll be very, very fascinating to see what happens. As you saw, by the way, the votes. We have more votes already mailed in hand, than we did in all of 2016, and there's plenty of time left to go. Early voting is exploding everywhere, so we know it's going to be a big election. I was bothered today when I read an article, and I forgot if it was in Bloomberg or Reuters, it was one of the two, about the army of attorneys that have been hired by both sides to contest the election already. So if you think you're going to bed and this election's done in the bag and not going to be contested, Then that same article was talking about major cities, how they're boarding up again, and I see it in Chicago. I was driving down in the city today. It's absolutely, number one, some people never took off their boards. Others are getting ready to board. I can see it. And they're fearful of riots in the street when we don't get a result, or if they don't get the result that they like. Be ready for that. It's going to be a rough time ahead. When we look at the chart with swing lines, the pattern has been one that's very clear, lower highs. It had been lower highs, lower lows until right here. See that? We didn't know where that low would end up, but the fact that you had an up week now means you have a higher low and lower highs. It's a pause in a downtrend. When I look to see where it paused against, my gosh, there's that 18-week moving average of closes. That's that line in the sand. So what does the market have to do? To get bearish, it's got to close under 18.99 on a weekly basis. If it does so, you've got that down. Ideally, you would take out 1882.50. That gives you the bear pattern. Let's flip the story. What does it have to do to be bullish? You can't take out 1882.50, and you've got to get back over 1929.10 and just close over that 18-day average. That would then give you the higher lows, a higher high over the 18-day average. You're at a key spot in these markets right now. Very important. Keep your eye on them. This is a big, big week. Bollinger Bands are not in play. What do I mean by that? They're too far away right now. 2029 and 1768, those are big numbers away. So that's not what the market's looking at. And momentum just didn't turn down. It's been going down. So momentum down, not plunging, down, not oversold either. This week's going to tell you if price can turn momentum, or if momentum's going to drag price down, get you through that 1882.5 and to take the market down for another level. Real important week right in front of us. The silver-gold ratio, or gold-silver, depends which way you want to call it. We had gotten up into this 120 plus area. We're back down into the 77 level. The market has been staying underneath the 18-week moving average, and ever since it has, the trajectory has been basically to the downside. You've had bounces along the way, but that's what it is. This is a really wicked number. I mean, I was brought up where gold-silver ratios, 30 was a big number. You got to 120, so that gives you an idea. But as long as it stays under that, it means silver's acting better than the gold market. When we come to the silver chart, the silver has got a pattern of lower highs, lower lows, still unable to close under the 18-week average of closes. Any close under that number's 23.97, turns the trend down. You would then have lower highs, lower lows, a settlement to under that number. Let's flip the story, because you're in important areas here. Let's assume this market doesn't get under 21.96, but gets back over 25.71, about $1 higher than where it's at. That would give you higher lows, a higher high, put the bull market right back on, and probably stop momentum from going down. You'd be over the 18-day average with upside bias. Those are my breakout points in it. In the copper market, what do you do the first time you hit a Bollinger Band, be it a weekly chart, a daily chart? That's where you're looking for the resistance. So this market went right on up, hits a high this week of 321.80. I told my traders, I'm thinking the pros are taking money off the table, and the market falls back 9 cents. But it is still a bull market. Momentum is still bullish. The trend is still up. Until you take out 302.45, I expect these pullbacks are still buying opportunities in this market. Here's a market that said, hey, I want to join the party. I want to become bullish, and it did. With this week's rally, you now have a higher high, higher lows. I think the bulls in the market are going to step in here. I think the number they don't want to see taken out is this week's low of 840.40. It is a big risk because you're looking at a market of 48 cents. It's over $2,000. And their target, though, is a big one, back up at 993.80. In the dollar index, trend remains down. Now, while you get the certain noise on the daily charts, this chart has not backed off. This chart is still, to me, screaming it wants to go back to the 9100 level until 93, 92 is taken out. You have lower highs, lower lows, a bear trend. I don't see why the dollar bears would back off on this. I think you're going to be looking at a massive amount of spending, regardless of who wins the presidential election and or the Senate. I think the House is a given. It stays with the Democrats. We're probably at that point looking at a market where traders will say, well, if the U.S. is going to spend that money, the consumers will come back. It's great for importing of other business. I think that's one of the things that kicks up other currencies that you have to consider. I talk about this and a lot more in my morning futures video, but remember, I also put out a weekend subscriber futures video. And what we do in these, I get up early. I'm a 4 o'clock reader in the morning. And by 4:30, I've already had coffee and so on. I'm waiting to put out updates for you at that point, basically. And I'm going to discuss in it. I'm going to start you off every day talking what I saw in Asia, what happened in Europe, and then bring you to the American markets with the reports for the morning, what the estimates are, and if there's any news that moved markets overnight. Because remember, we open at 5 in the afternoon starting on Sunday and don't close, basically, other than 1 hour every 24-hour period from there at 4 o'clock to 5 o'clock on a Monday through Thursday. And then we close again Friday for that. Basically Friday we close at 5 and then we wait until Sunday at 5. I got a lot to cover and that's good. And then on the weekend what I do, because I say longer term position trades, I brought on, we're included in this subscription, our weekly charts only. Similar to this but with a lot more of them and a lot more information on them. Buy here, sell there, do that. We also include our smart app. Our smart app retails for about $35 a month. We give it away free with a subscription. Why? I want you to be able to get my push notification that I've done it. Remember, I didn't say text. Push notification. That's free. So your phone will light up, oh, Ira's video is ready. You can either watch it there, you can watch it on, if you wanted a pad, any pad that you've got, iPads, whatever it might be, or your computer. But you know it's out, you know that I'm ready to tell you what's going on, what I'm seeing in the market, and what I think you should be doing. So those are where I go with. A lot of people also take, if you will, the combination of my end of the day spider, for the people that trade the ETFs and the like. I cover all these markets in the futures. I write about them in my full research reports as well daily. A lot of people like them because they're quick read, but they're right to the point. And I cover all this and give you my thoughts as to where you're coming in the markets, what's going on. You may not want to watch the whole morning video. They're about 20 minutes long. You're going to go, I don't have that kind of time. I get it. So we put a scroll bar at the bottom. All you do is pull it, and it's going to light up in big letters. It's going to say metals. Right when you get it, just let go. It's going to play. You can play this video over and over as long as you don't close the window as well. We give you a certain amount of views, but we protect ourselves so that people don't pass around passwords and so on. We look at IP addresses and the like. In any case, the cost, if you're a Starbucks drinker or one of the better brews of coffee like them, $7.95 for the first 30 days. After that, it goes to $15 and there's no contract. Let's assume you want to buy a year up front. I make that available. You pay up front, $13 a month, you're done. You're going to get an awful lot of information. I charge for my special reports, not my subscribers. So you get those as well. And my webinars are always free into the live webinars we do. How do you get it? Go to our website. Under the word research, it explains everything there, and that's where you pick it up. You can call my staff. They all have now. Our new phone system's phenomenal. Because we're not in the office, it rings right to us on our mobile phones, records conversations. Just a phenomenal new tool. Thank you, Linn. In any case, I'm Ira Epstein. You have a great day.